All right, good morning, folks. From the Asia Pacific, it's 9 a.m. here in Hong Kong, in Beijing, and in Shanghai. Welcome to Bloomberg Markets China Open. I'm David Ingles with Yvonne Man.
Yep, our top stories here this morning, just happening in the last few minutes. Chinese property developer Evergrande faces imminent liquidation as the Wall Street Journal reports the company and overseas creditors failed to reach an agreement. China banning the lending of some shares of short selling from today in a fresh bid to support its slumping stock markets. Plus, oil gaining as U.S. stocks futures slip after separate attacks by Iran-backed militants kill U.S. troops in Jordan and also hit a tanker in the Red Sea. It is Monday morning. It is busy, David. We're not sure what really the top story is, but I think Evergrande really kind of moved up our rundown in the last few minutes.
Absolutely, because this 9:30 hearing that was scheduled anyway to begin with, we now have an indication of which direction that might go. And, we'll unpack really what this means if indeed, of course, the talks did break down and what that means as far as what the sort of step 2, step 3s are concerned here. Going into the market action today, just have a look at where we are, and certainly just keep in mind the risk-on sentiment we're coming off from last week. Then you had the Ministry of Commerce briefing on Friday laying out some pockets of this equity market to watch, appliance makers, car makers, what have you. A50 futures, plus, of course, Sunday, the big news there on some tightening around the lending of some securities, 0.5% to the upside. So it's looking like we will be getting a higher open this Monday. Not to mention it's Fed week, it's jobs week, and a ton of earnings coming out of U.S. large caps this week. Flip the boards, please. Korea and 3 markets coming online. A big day in Southeast Asia. We just had the MAS out of Singapore keeping policy settings unchanged. Third straight meeting, I believe, there. The Philippines flagging a possible rate cut this year. 2024 markets are bid, as you can see there across your screens. Not a lot, but we'll take it, won't we? Okay, oil markets, we haven't talked about this a lot. This is the other big story, and as you can see, Shanghai crude is playing some catch-up. Although at these levels, we're pairing some of the early gains on both Brent and West Texas. Oil stocks are very much in focus on the back of these news, and we'll unpack the geopolitical angles to the situation. Bond markets, your 10s on your screens. Bund futures, bottom of your screens, coming up very, very soon. There we go. Higher on Bund futures. We're mixed across yields right now. And FX markets, we're coming off, I believe, a 4th week of gains or strength in the U.S. dollar. Inflation numbers coming out on Friday in the U.S. And of course, we talked about Evergrande. That comes out, of course, later this hour.
Yeah, let's get to our breaking news this morning. The Wall Street Journal reports that Evergrande faces imminent liquidation after talks with creditors broke down. Joining us now is our bond and loan reporter, Loretta Chen. What's going to happen at 9:30 now?
Yeah, so our reporter has been lining up outside of the Hong Kong High Court, and 9:30 Justice Linda Chen is, we're expecting her to make a decision whether Evergrande should be winded up at this moment. So we had several hearings before this where Linda Chen was urging the company to come up with an agreement with creditors, which is a key factor whether the company can survive that hearing. And now we're hearing from Wall Street Journal, it seems like talks have broken down between creditors and the company.
What's this other hearing today at 2:30 p.m. that seems scheduled? It's a rare one. Just talk us through the implications and what this actually is.
Yeah, so that hearing at 2:30, also by Justice Linda Chen, will be contingent upon what happens today at the 9:30 hearing. If Evergrande is indeed liquidated today, this morning, then at 2:30, Justice Linda Chen will appoint a liquidator, and the whole liquidation process will kick off from there.
Okay. Let's just play scenarios. If there is a wind-up here, what does this mean for the markets? I mean, this is at a time when it's quite crucial. We're seeing much more of a stock market rescue, too.
Yeah, we do know there's been winding up of Chinese property developers, but nothing on the scale of Evergrande. So Evergrande has, 19 billion in debt offshore with its creditors, and over 300 billion for the entire company. And so, if a company like this gets liquidated onshore, the markets will certainly drop. And for for other property developers, this is pretty ominous news. And I think it will potentially embolden other creditors who are just so frustrated with the debt restructuring process. They will possibly press on their claims like Evergrande's creditors. And I mean, Evergrande's restructuring, going back a little bit, it was going on the right track until the founder was under police control, and then everything just broke down from there.
All right, Loretta, thank you. Loretta Chen there, our bond and loan reporter. We will continue to watch the story. We have about 25 minutes to go before that court hearing here in Hong Kong. As we've been talking about what's been going on in these markets, China has taken further steps to support its slumping stocks, halting the lending of certain shares for short selling. For more, let's bring in our chief North Asia correspondent, Stephen Ingle, right here with us. What do we know at this point?
Well, there are a couple of things that are developing on the regulatory front. One of the stock market and also with LGFVs. I'll get to the local government financing vehicles and the short-term bond issuance and some window guidance that is coming from regulators. But essentially what we're hearing about, this is another step on trying to put a floor on the sinking stock market. As we saw last week, of course, the MSCI China Index had its first winning week in 2024. This after that index has slumped 60%, obviously, since the peak in February of 2021. So again, they're trying to do all these steps. Is it enough, though? I mean, Friday we saw some weakness. And again, I think investors are digesting the various moves that have come down the pike and saying, look, there needs to be more steps on property, supporting the property market. There perhaps needs to be a medium-term lending facility rate cut. But again, this is another incremental step. Essentially, back in October, I think it was, authorities put limits on the lending of shares that executives and other key employees put in strategic placements, as well as other curbs as well. Now, regulators are saying, according to sources, China will halt the lending of certain shares for short selling as of today. Strategic investors won't be allowed to lend and those shares and have. I'm trying to read my own writing. Yes, so there's the agreed upon lockup period, right?
Yeah.
So they can't sell those or lend those shares during that agreed upon
Yeah, so that takes effect today, and there's another step that takes effect in mid-March as well. Steve, we're also getting the latest indicator, at least this is backward-looking, industrial profits, and this simply just tells us that this economy's, we don't have a lot of tailwinds going into this year.
Yeah. I think the LGFE story is probably more important to talk about right now.
Okay, so the short-term LGFEs.
On industrial profits, it's improving, even though the full year was not very impressive. It was down 2.3% for the full year for the top industrial companies in China. Essentially, though, there was a lot of growth backloaded in November and December, up, 16.8% in December, 29% in November. But again, that's based on base effects because the year before factories were closed because of outbreak in COVID. But anyway, it looks since August, industrial profits are starting to improve. But on that LGFV story, which is very interesting as well, because, again, China is facing a record level of dollar bond maturities this year, and authorities are a bit wary about incurring more debt. And at the same time, the LGFVs are being asked to shoulder a lot more funding burden to get investment-led growth going. So it's a chicken and egg thing. What are you going to do? Where are you going to get this growth from if you're also limiting new bond issuances? So what these LGFVs have done is been selling short duration, short maturity, short tenors of dollar bonds offshore because of all the restrictions of onshore bonds. And if it's less than 1 year tenor, they don't need to get NDRC approval. So they've been selling this, they've been issuing these a lot. Now we're hearing from sources, and again, I need to make sure I get this right, put on my big thick glasses. The securities regulator has reportedly, according to sources, asked some investors to refrain from increasing their exposure to dollar bonds with tenors less than years issued by the LGFVs. Simply, this is another alarm bell, again, for the funding needs for China, but also cracking down on the ability for these LGFVs to raise funds to build those projects, fund those projects that the central government needs. If the consumer, that's a whole other story we need to talk about maybe in the next hour, about the consumer. But if you're not getting the consumer to spark growth, you need that investment-led growth.
well, the plot thickens, doesn't it?
Yeah.
Ahead of the open today, LGFVs, high-yield bonds, property securities. We talked about Evergrande. And as Steve was alluding to there, of course, your consumption plays, appliance makers, car makers, the Ministry of Commerce briefing out on Friday. Plenty more ahead. Stephen Engel, by the way, thank you so much. Ahead of that, so we haven't even talked about the PMI numbers are coming out tomorrow out of China, which really leads us in sort of curtain raiser for another big week ahead as far as policy implications. You have the Fed, of course, beginning their two-day meeting that wraps up Thursday early morning in the Asia Pacific, takes us straight into the Bank of England rate decision, where inflation, by the way, last week showed an acceleration there. Plus, of course, it's a jobs report also on Friday. Yeah, and everything in between here, of course.
Yeah, I think for this Fed meeting, everyone's going to think, are they going to talk about rate cuts?
Yeah.
Are they going to discuss about March? Are we going to hear that, from Jay Powell that, rate cuts are imminent? And then there's all the whole QT discussion.
Yeah.
As well. Are the conditions met that you can slow down this whole runoff of the balance sheet? Of course, as they start talking about rate cuts, too.
Yeah, and, as inflation continues to surprise to the downside, but as far as, spending goes, the consumer appears to be very, very healthy. 2.9%, I think that was the Friday print on core inflation. So we're not quite at 2. We're below 3 for the first time, I believe, since 2021. And of course, we talked about the Bank of England rate decision, and certainly it's the last meeting before, of course, we get into March, where the current pricing suggests it's almost a coin toss between for March whether they hike or they begin this cutting cycle. Plus, we haven't even talked about all these earnings coming through out of the big tech companies in the U.S.
Mag 7, all that.
Mag 7. There we go. Okay.
Still ahead, we're going to talk about oil prices jumping after attack in Jordan. Kills 3 U.S. troops, and Houthi militants hit a tanker carrying Russian oil. We'll have more on those Middle East tensions later on in the show.
Plus, ahead of that, we'll be speaking with Rubico's head of APAC equities, what their top conviction calls are, how they feel about this Chinese equity market following increasingly more support measures coming through from last week. Joshua Crabb joins us in a couple of minutes, 19 minutes to the opening bell. This is Bloomberg Markets, China Open. Good morning. Okay, we are set for a higher open today, as you can see in futures. Let's call it 0.4%, 2.5% on your 10-year yield, and we should be getting the renminbi fix in about 45 seconds from now. While we wait for that, let's talk equities. Joshua Crabb is with us here in set, head of Asia Pacific Equities at Rubico. Good morning. Nice to see you, sir.
Morning.
Shall we start with China? Let's start with China. Why not? Were you guys busy last week? It was a big week, well, arguably a big week last week, just looking at the support measures coming through.
Yeah, I think it was an interesting sort of period of time. I think we go through these sort of phases, but this has probably been sort of the one where we've seen the most concerted effort with a few days in a row of sort of supportive measures coming through. So clearly it's, policy, focuses a lot more than it has been for some time.
You don't sound very convinced, though, that this could be a turnaround, it sounds like.
It's not that I think the whole market focuses on this big bang approach, right? The market for so long has been waiting for this sort of big bang approach that's going to make a big difference to the market. And I think if you look at it from what the policy, providers are sort of saying, it's like slowly certain areas, they're interested in transitioning the economy. It's about not having properly sort of implode, but then by the same token, it's not about a big bang approach that's going to bring every sort of thing back to the fore. So, it's a cheap market. There's these, measures that are going into place, and we think that's going to open up some opportunities. But that big bang that everyone's looking for every day, we don't think is going to be the way that it happens.
Right, and it seems, you're right, it seems that we're getting these periodic 10% rallies in a bear market on an index level. And to your point, there are opportunities here. When you talk tactical opportunities, are we talking days, weeks? How long is that window for you guys when you look?
Yeah, I mean, we try not to focus on the short term.
Okay.
I guess the way we try to think about it is when does the short term noise create an opportunity, right? So you might have, for example, like an event occur that sees some stocks come under a huge amount of pressure, and what we try to do is spend that time thinking through, where's the value starting to sort of appear, right? It's very hard to pick that catalyst for when things are going to change, but when we see that value starting to appear, and you see a sell-off for a reasons that we don't really believe in.
Like this time last week, right?
You get the opportunity to sort of pick up. And, I think in a lot of areas, like, what's the Chinese economy going to do? It has to move from, one that's been very reliant on real estate, on export, to one that's going to be more consumption-based. There's going to be certain things that start to change. One of the things that I think is quite interesting that we've seen in recent times is that sort of, people have gone through, when is AI going to rebound? When is this going to happen? When is that going to happen? But you've seen a lot of these big stocks, with these big dividend yields we've seen for some time that have been ignored, starting to get a lot more focus. And for example, with some of the policy measures recently around potentially more, release of that value, I think people are starting to have a look at, where are the companies where you can see quite a big increase in those dividend payout ratios. That's an easy sort of win. So I think that could be an interesting tactical opportunity.
Where is that best dividend play now? Within China, then? Yeah,
so I think it'll be in, a lot of it's going to be in the SOE area. I think a lot of those where, where that sort of, the cash flow is there. People have sort of thought these are lower growth businesses, so they've never been in focus. But now all of a sudden, with the policy direction coming, let's see more sort of dividends coming out. But also in some of the private sector as well. I mean, these valuations have now come down to such a low level. And these are high cash flow generation businesses, whereas we see that sort of increase in that money coming back to shareholders. Because people are worried about the capital return. But if you get, 5-10% dividend yield coming back, you're paid to wait. And that's what we're seeing in that market currently.
I want to ask you about Japan. How do you feel about that market after what we've had? I was going to say 2023, but the first 3 weeks of 2024 have also been stellar.
Yeah. I think that Japan's been one of those interesting markets. I mean, at the back end, going at the end of 2022, we think that was starting to look really interesting. There's real change happening. Real inflation starting to come back. Restructuring really starting to happen in earnest. And people had sort of ignored it. And in some ways, as a US dollar investor, that hadn't mattered as much because the yen had been so weak. Now we're getting to the point where that yen weakness is starting to sort of stabilize and people are starting to relook at it. But I do feel that when people look around the world, what's a big liquid market, when people may have some concerns over the Magnificent Seven and their valuation, people may have some concerns over China, it's a logical place for investors to go back and look at. We think that story will change a little bit. It may move a little bit more domestic with the yen stopping to depreciate. You see more of that move towards consolidation. You've seen a lot of moves in that area, things that we haven't seen in Japan for multi-decades. So we still think it's going to be an interesting market.
You hear that from almost every guest that we have coming on. It's either Japan or India. When all the positioning it seems to be all being thrown in these two markets, it's almost like everything's been priced for perfection in some ways. Though, are there risks to that? Piling into these markets?
Yeah, look, absolutely. The only difference I would make between those two markets is I think, India's a great story. It's going to have great growth, but it's at a very premium valuation, even compared to its own history. I think if you look at Japan, we talk about a market that's got back to where it was 30 years ago. So the value that sort of sits within that market is a little bit different. And also, again, keep in mind there's the sort of local currency versus the US dollar. So if you've been hedged, it's been a phenomenal return. If you haven't been hedged, the return's been not quite as sort of big. So I think they are slightly different. And I think the drivers of them, India's much more around growth. Japan's much more around restructuring, consolidation.
What else do you feel strongly about? Southeast Asia? Anything in between we've talked about?
Yeah, look, I think Southeast Asia, again, coming back to how people look at markets, everyone's looking for some big liquid opportunity, and that's why India, Japan's getting the attention. But if we look at Vietnam, we look at Indonesia, we look at the Philippines, these are great long-term stories. They can spend lots on infrastructure with high, marginal return on investment. They've got good domestic consumption stories. They're going to benefit from supply chain diversification. It's just going to take time for them to get big enough to really get on the sort of the agenda for people to sort of focus on.
I was going to ask you as well, as a massive dollar investor, does it bother you that those markets aren't as liquid and deep?
It does, but again, that's part of the reason why you get to get them cheap, right? Why is India trading at an all-time premium? Because people look around the world and it's the easiest story, the money floods in, it's the easy opportunity, right? So if you want to look for something, if you want to look for, a bit more of a hidden treasure, you want to look for a bit more, value that's not uncovered yet, you have to take some of those risks.
Great.
Joshua, great to have you. Thanks for kicking off the week with us.
Bye.
Joshua Crab, their head of Asia Pacific Equities at Robeco. I just want to recap that yuan fix that just came through here. Another strong sign of support for the currency, 710.97. The estimate was for about 718 handle, so we're talking a little bit more about 700 to 800 pips stronger to consensus here, and we're talking about, we're just around that 718, 719 handle for offshore China.
Okay, in about 10 minutes from now, and we're getting the initial pricing today on Evergrande, 1.5% to the upside, and based on this reports out of the journal here that creditors and the company itself could not agree on restructuring terms, and that it seems that we are headed toward a liquidation. Hearing begins in about a couple of minutes. Shares, as you can see on your screens, 1.5%. So we'll continue to stay on top of this story and also the broader high-yield space here in Hong Kong. Futures have now paired most of the earlier strength. We're probably looking at a flat open as we speak. There we go. 8 minutes away. This is Bloomberg Markets, China Open. Good morning.
All right, we're already starting to see some movement when it comes to Wuxi stocks and assets here this morning. And obviously after we saw that massive slump on Friday on news of the company being put in this U.S. draft bill, the Biosecure Act. And certainly we saw a little bit of rebound in these stocks here today. Look at Wuxi Biologics, up about 1%. A statement from the company. They were saying that the CEO hasn't worked for any military institution. And we are also talking about Citi here, saying, you know, maybe we might see a bit of a bounce here, just given just the cheap valuations here, but still might face some weaker investor confidence.
This, 1% gains hardly gets us anywhere near levels this time on Friday. The stock at one point fell, I think, 30%.
Yeah.
Ended down 18%. Aptec, I think, ended on 16%. What seems to be gaining, not in the Chinese market, on the story is Samsung Biologics, which is, of course, one of the rivals and peers there, jumping after, of course, on perhaps the probability that Wuxi might find itself in some challenging waters ahead. We'll talk about Evergrande in just a moment, but the journal reporting here that, the company and its creditors could not find common ground on, or agree on restructuring terms. The hearing, of course, today at 9:30, and then possibly, depending on what happens there, there's another meeting at 2:30 p.m. local time today that then discusses perhaps next steps. We're looking at oil, other oil counters as well going into today, and really on the back of this move up in oil prices. This is certainly something, this geopolitical element to this.
Yeah, and really the fact is everyone's waiting for what the U.S.'s response is going to be, given the latest sort of strikes that we've seen.
Yeah.
And we're watching very closely what goes on with not just the oil sector space, but also just everything that's going on with this, stimulus sort of induced rally that we've seen in China, and the latest that we heard over the weekend when it comes to short selling and the like. More signs of maybe support coming through when it comes to the consumption space and property. Guangzhou, seeing a little bit more when it comes to relaxing of some curbs there. So there you go. You are seeing the pre-market up about 0.6%. Shanghai crude is up 2%. There you go on those Middle East tensions. And we're watching analyst actions very closely. Some pretty interesting ones to tell you about here today. CNOOC A shares cut to neutral there from ICBC Research. On the flip side, you have Sinopec A shares raised to overweight at Morgan Stanley. And they have a pretty interesting call at MS on AAC Tech, raised to an overweight, saying potential significant earnings recovery this year. They're talking about, 39% upside from current levels.
Wow, okay, that's something. And certainly out of context, I guess, compared to the consensus, that's about 3 or 4 times the index projection for earnings growth. We talked about Evergrande. We talked about some of the tightening around lending and securities. Home and appliance makers, Commerce Ministry out and looking to promote this, and the replacement of old cars and home appliances. And just going into the open, futures are, in fact, in Hong Kong, pointing higher. Maybe some weakness coming through, relatively speaking, onshore. We're coming off the best week in the Shanghai Composite since the Politburo boost back in July. The open 3 minutes away. This is Bloomberg Markets, China Open. Good morning to all our viewers from the Asia Pacific joining us all across the world. We're dispensing with our customary live shots of the Victoria Harbour today, and this time around we're looking at live pictures of the High Court here in Hong Kong, and inside that building is a Judge, Linda Chan, who in a few minutes, we should be getting maybe headlines here, will be deciding on the fate of Evergrande, of course, and whether or not we do, in fact, head towards a restructuring and liquidation of the company.
Yeah, just to keep you up to speed, it was a 8-week sort of reprieve that she said, before she said it was the last adjournment maybe this is the last one. So we had 2 months off, and now we're come to this again. The Wall Street Journal is saying that, these creditors failed over the weekend to really reach some sort of deal. So, is this imminent now, this liquidation? We'll know possibly in the next few minutes and hours or so. But this is how the market open is looking like here today. There you go with the Hang Seng fired up here at the get-go. We're up about 1% on the back of a series of sort of moves that we've seen over the weekend, whether it's when it comes to, in some ways, you restricting lending. When it comes to short selling
at the margin.
There's been talks from the Commerce Department about replacing cars, replacing old appliances here, so maybe that could help bump in some of these consumption stocks here today. And of course we also have the Fed, right? So that's coming through here this week as well. Any sort of signs of when this rate cut cycle could start might be a lift to risk assets here today. So you see HS Tech is up some 1% here right now. We're watching very closely what goes on in crude markets, just given the escalation we've seen in the Red Sea, and we're seeing Shanghai crudes up some 2%. Energy stocks definitely are catching a bid here this morning. And we're watching those developers. Look at that. We're up 2% on the Bloomberg Intelligence gauge here. So it's not just the Evergrande stuff that we're focusing on, but also Guangzhou furthering some more relaxing of curbs there. So we're watching very closely some of these more Guangzhou, Guangdong based developers and what that means. And that goes to go Country Garden, Guangzhou, RNF, and KWG there. There you go. KWG up some 11% on the back of some of these measures here. Evergrande is just slightly up. We'll watch, of course, those assets throughout the hours. And also a lot of movement when it comes to Wuxi Biologics. So it was a record slump on Friday on news that they may be on this draft of this U.S. bill. The CEO has come through saying that, look, they don't have any sort of connection with the military. The stock is recovering, up some 4%, but as Dave mentioned, we're just kind of barely, recovering from what we saw on Friday. And we're watching very closely the consumption and these consumer stocks, BYD, higher smart home, the like, just given what we heard from the Commerce Department as well. And oil, there you go, CNOOC up some 2%, following the price of crude.
Okay, so to get us warmed up here this week, there's the Evergrande story. There's some of the measures Yvonne is pointing out. There are PMI numbers coming out tomorrow. And, who knows what else we could hear from policymakers as we head into Lunar New Year and eventually the NPC. We're talking all things China plus all things fixed income. Vanessa Chan is with us here on set. She heads Asia Fixed Income Investment Directing there at Fidelity International. Good morning.
Good morning.
So Evergrande, let's play scenarios here. Assuming we head towards a liquidation, what does it mean for the broader high-yield complex?
Yeah, I think a lot of the negativity is already priced in. I think that's the first point. But what this potential situation would trigger is investors will start thinking about the ongoing restructuring of some of the other high-yield names in the market. So they will probably be thinking what kind of tools could be used. So it could be debt extension, debt equity swaps, haircut, and hopefully that will help in terms of some of the restructuring to kind of closer to the finishing line. We have to admit that the overall process have been slow, which is not a surprise. And I think a lot of some of the other ongoing restructuring probably will be less kind of complex compared to the Evergrande situation.
What do you think? I mean, for dollar bond holder creditors, then are we thinking that in terms of priorities? They will probably be in the bottom of the totem pole here.
Yeah, I think that's probably unfortunately likely to be the scenario, and which is why restructuring become important, because if the restructuring could be done in a way that could balance out both of the kind of higher priority liabilities holders and the bond holders, then there could still be some chances of the bond holders of getting something back.
When do you suspect, this is a broader question, when do you suspect the offshore dollar bond market returns as a viable financing option for developers?
Well, I think first of all, we need to start seeing the physical market stabilizing and providing kind of the flows to the developers. I think second is looking at the remaining developers in terms of the overall liquidity situation. There are some developers that still have some upcoming maturities, so they will be kind of pretty look at fairly closely to see how they could refinance themselves. There's also kind of gradual additional measures that come through from the government. So earlier on, there is the policy that's allowed developers that have pledged the commercial property for loans to allow them for other refinancing purposes. So that will certainly help some of the remaining developers that have viable kind of high quality properties to get a little bit more liquidity. So it's a combination of the liquidity of the individual developers, the kind of recovery of the property market in order to kind of gradually build confidence from investors. So that could potentially be quite a long process.
Yeah, you mentioned that one, that measure about using commercial property. We kind of overlooked that last week, just given all the news. Does this give a lifeline to what sort of developers in particular, do you think?
Yeah, I think, first of all, it does give lifeline to developers that have fairly high quality. First of all, they need to have the commercial project. So it could be office building, it could be shopping mall, it could be the tourist project that they may have. So the developers need to have the projects. The developers need to have a viable kind of regulated operation. So some of the kind of weaker names or the names that have already defaulted may not be kind of totally fit in terms of that policy. I think second is that developers that have high quality projects, commercial properties, tier 1 cities, IPs that have been giving them rental income, those are the projects that potentially will have the benefit. Bearing in mind that we do sense a kind of cautiousness coming from banks as well in general in terms of extending lending to developers. And that's probably the real challenges here, is that a lot of the onshore banks are still quite defensive or cautious when it comes to lending to developers.
The best opportunities in China right now for you, this included or this not included?
Well, I think you kind of need to separate that in a slightly different basket. Okay. We do think that the overall Asian high yield China properties still provide good opportunities. Particularly, there are Macau gaming that's been doing quite well, both in terms of the recovery on the gaming revenue, the kind of tourist visits have picked up. There are renewables opportunities in terms of India. If you look at the broader Asia fixed income space, we think the high quality IG credit tends to be a little bit more attractive. We acknowledge that spreads are really tight, but then I think some of the banking papers, tier capital papers from Korea and China, high quality SOEs, potentially, and some of the tech names could also be interesting.
We have the Fed, obviously, expect not to do much, but if we see any sort of guidance of what this rate cut cycle looks like, how do you look at the U.S. market and high yield there now?
Yeah, so first of all, I think it's a kind of balances between inflation and growth. So I think the market broadly will acknowledge that inflation already peaked, and there's a very highly likelihood that Fed will need to cut at some point, probably either end of Q1 or beginning of Q2. But at the same time, when you look at the growth driver in the US, particularly on the consumption, there are actually signs of kind of slowing down. So credit card delinquency have picked up. The kind of individuals that have more than multiple jobs have also picked up. So the growth part or the consumption part of US is actually slowing down, which is why that when it comes to the US market, we do think that we try to move on to high quality defensive credits as well. IG investment grade are the kind of sweet spot that we're looking at.
And duration in that?
Yeah, and we also started kind of gradually adding on duration, particularly towards the end of last year. But at the moment, most of our fund will probably have a slightly overweight in terms of duration compared to the index.
Final question, since you mentioned something on Korea paper, are you not worried about the banks there, project financing and some of the stress that's in some pockets there, right?
Yeah, so for Korea, I think we were looking at some of the high quality banks, looking at tier capital papers. They're frequent issuers. They're probably likely to come into the market, which potentially offer a little bit more kind of premium.
Vanessa, thank you. Vanessa Chan there, Fidelity International's head of Asia Fixed Income Investment Directing, joining us here in Hong Kong. We got plenty more ahead. This is Bloomberg. All All right, watching the oil space very closely here, just given the events that have unfolded in the Middle East over the weekend here. Shanghai crude is really following what we saw when it comes to Brent and WTI here this morning. The energy space is all catching a bid here this morning. And President Biden has now vowed retaliation after Iran-backed militants killed 3 U.S. troops and wounded dozens of others in a drone attack in Jordan near the Syrian border. They're the first American deaths under enemy attack since the Israeli-Hamas conflict started in October. This prompted calls by some Republican lawmakers for Biden to order strikes on Iran.
Let's bring in Bruce Einhorn for more on this story. And markets are looking at the tone coming out of the White House and what to expect, really. So what can you tell us about it?
So some context here. There are about 3,500 American troops in Jordan. This attack took place. If you're familiar with the map of Jordan, there's that part that sticks out toward Iraq. So this attack took place near the border with Syria, border with Iraq. 3 people killed, about 2 dozen wounded. There have been dozens of attacks on American forces in the region since October, when the Israeli-Hamas war started. These attacks up until now have not led to any fatalities on U.S. troops. This, of course, now does raise the ante in terms of what the U.S. response will be. President Biden says that there will be a response. In his statement, he said, "We know it was carried out by radical Iran-backed militant groups operating in Syria and Iraq. We shall respond." As you mentioned in the intro, there are calls from Republicans for there to be response directly at Iraq rather than focusing on the proxies. One example of that would be Lindsey Graham, senator from South Carolina, who said, hit Iran now, hit them hard.
Does this potentially impact any sort of ceasefire talks that they're talking about here when it comes to the Gaza Strip?
So those talks are ongoing. According to people familiar, the U.S. is cautiously optimistic that a deal is within reach. The director of the CIA was in Paris yesterday for talks with Israeli officials, Egyptian and Qatari officials. The plan is, if all works out, that there would be a longer ceasefire. The previous ceasefire only lasted for a week. This one is envisioned to go for several months. There would be over 100 Israeli hostages released, a number of Palestinian prisoners. That's yet to be determined. No deal reached yet. A lot of things could still go wrong, but the U.S. at least is optimistic that we could have a ceasefire soon.
Bruce, thank you, Bruce Einhorn, with an update there, Bloomberg reporter on what's been going on in the Middle East as well. Some other stories that we're tracking for you this morning. North Korea fired several cruise missiles on Sunday as leader Kim Jong-un ramps up his rhetoric about a potential conflict with South Korea and the U.S. South Korea's military says multiple projectiles were detected near the North Korean port city of Shimpo. Kim has ignored Washington's calls to return to long-stalled nuclear talks, which offered economic aid in exchange for disarmament. The U.S. says top officials have discussed scheduling a call between Presidents Joe Biden and Xi Jinping sometime in the next few months. It's the latest effort to maintain high-level contacts that were revived after the presidents met in California in November. We're told U.S. Secretary of State Antony Blinken is also expected to visit China again this year. Sources say the U.S. is aiming to announce major chip grants by the end of March aimed at supercharging domestic production. The awards are slated to go to Intel and other U.S. chip makers, as well as foreign firms, including TSMC and Samsung, to help them build factories in the U.S. Money from a $39 billion bill that President Biden signed into law more than a year ago has been slow to trickle out, with only 2 small grants announced so far.
Okay, an update on Evergrande's 15 minutes into the session, and shares are now cascading lower. 20% at one point. We're pulling back ever so slightly from that, but as you can see, 17.5% right now. I'm looking at volumes and higher than usual with all the news flow coming through. The Journal reporting about 40 minutes back that both sides could not find common ground here, at least broadly speaking, on the restructuring plan. We're still waiting to get more news here out of this ongoing hearing, which I believe is still taking place.
Yep, still taking place. There's an afternoon one, which is a rare one that's been noted on the websites there, so certainly one to watch on the next few hours or so. This is going to be a pretty fluid situation. We're also talking about a pretty volatile stock here as well. well, not just when it comes to Evergrande, as we wait for what happens inside that courtroom, but also we're talking WuXi Biologics now, saying that a CEO, Zhishen Chen, has not worked for any military-affiliated institution in China, and that's after U.S. lawmakers introduced measures aimed at blocking some Chinese biotechs from federal contracts.
Yeah, let's bring in our Asia stocks reporter, Sang-Mi Cha, to talk us through this. And yeah, I mean, the stock is moving all over the place, Sang-Mi. So how are shares faring today? And just give us some context, because we need to look at what happened also on Friday to get a sense of how good things are relatively speaking today.
David, the shares are really volatile right now. WuXi Biologics is gaining a bit, 3.5% as it was just opening just now. And that's following a record tumble on Friday, just as you said, after the news that there could be a draft bill and a proposed bill that could be enacted perhaps, and that would impact the company's contracts with the American government. So that would actually, if they say that it would be, the companies say that it is in a very early stage of discussion. So in order for the bill to actually go and to be even proposed and even pass, it would take a long time, and they're right now just denying all these allegations that is out there. So there are still uncertainties right there, but we know that if it is enacted, that would really impact the company, that it will not be able to have any of the American contracts with from the U.S. But and the key issue is whether the private companies will follow suit, and if that happens, that would definitely weaken the investors' confidence, which we have already seen on Friday following the news.
Okay, yeah, and I mean, they came out in the statement, saying business operation remains normal. I mean, what can we expect moving forward now in the next weeks or months?
Moving forward, we hear that it's already been expected that today we will be seeing a little bit of a rebound, and this could follow in the next few days, analysts are telling us. But definitely that weakened investor confidence and that sentiment towards the China healthcare, as well as the companies, especially the two companies, means that there could be a little more of the falling that we will be seeing. When it comes to the WuXi Biologics and WuXi Aptec, both of them have generated a lot of the revenues in the U.S., especially when it comes to the first half of 2023. So given that, it has a huge impact, and some of the analysts are saying that this could be more of the investors gravitating towards the pure Chinese healthcare, so rather the biotechs and the drug makers. And when it comes to drug makers and the other parts of China healthcare, which is the hospital, for instance, the medical equipment makers, they have also had some hard time last year because of the anti-corruption campaign from the Chinese government.
Sang-Mi, thank you so much. Sang-Mi Cha there with the latest on WuXi and Aptec and Biologics. And actually, where Sang-Mi is, one stock that is gaining substantially on the back of maybe news is Samsung Biologics. We also heard from Citi talking about this earlier on as far as the WuXi story is concerned.
It might actually lead to people, that's what they're saying in that report, that it might push investors for more of these more China pure plays in the biotech and pharma space. So potentially there could be some longer-term implications for that stock. Evergrande, we're continuing to watch what goes on in that courtroom here this morning. We're hearing from this ad hoc group that a wind-up petitioner not ready to push. So, of course, there's been reports that they're facing imminent liquidation. We're still hearing what's really going on in that courtroom. Potentially, does that mean not push for liquidation? We're still kind of trying to figure that out.
Yeah, on the December 4th hearing, if it's the same petitioner, which I imagine it is, looking at how this headline is phrased, that group did not push for liquidation. So if they're not ready to push this time around, that effectively means the same thing.
Yeah.
Going back to December the 4th, and then we had another hearing, and then we're here again, right? So maybe this is the last one. Most indications.
Maybe.
Yeah.
Okay, markets are moving though. We talked about the fall that we're seeing when it comes to Evergrande assets. We got plenty more ahead in a market check. This is Bloomberg.
Welcome back. Some big corporate stories we're tracking at this point. Give you guys an update here. So Bloomberg has learned that Reddit is being advised to consider a valuation of at least $5 billion in its IPO. Sources say that's the view from early meetings with potential investors. Private trades of Reddit's unlisted shares have valued the social network below that current level, or below that level currently. Now, we're told deliberations around the timing and the pricing of an IPO are still ongoing. Now, FTX is unloading crypto assets and hoarding cash as bankruptcy advisors look to repay customers whose accounts have been frozen since the platform collapsed. The group nearly doubled its cash pile at the end of 2023 to $4.4 billion. The FTX has said it's exploring options to potentially restart its crypto exchange.
Yep, we've been talking about these kind of fierce moves when it comes to Wuxi, when it comes to Evergrande. But if you take a look at the broader markets here, the Hang Seng is continuing to rally here, and we're seeing gains of more than 1%. In particular, watching one space, the bad debt managers. There's been now Xinhua reporting that China is planning to merge those bad debt managers into the CIC, Dave.
Yeah.
What do we know?
So the three of its biggest bad debt managers into, to your point, CIC, which is a sovereign wealth fund, that's 1.24. Now, I think we'll probably need a lot more details and context on what merge essentially means in this context. The extent of the transfer of Cinda, Orient Asset Management, that's number 2, and Great Wall Asset Management was not clear based on the report which came out of Xinhua on Sunday. Indicates markets are, as you can see, seeing some gains across those stocks as we speak. So I guess continuing this ongoing reforms to in the bad asset sort of sector there and what that means. Also, we're focusing on what's happening in the oil with oil counters following this pop in oil prices globally. We're seeing a pullback on Brent in West Texas. The Shanghai contract, though, is seeing some upside in the order of about 2 to 2.5%. And certainly we are still waiting as far as the big picture is concerned here, what the response will be from the White House. So go ahead.
All right, just some breaking lines crossing when it comes to Evergrande. So we're hearing they propose a new restructuring plan in January. So we're getting a lot of mixed signals here right now. But what we're hearing so far is that this ad hoc group, the lawyer spoke in this hearing, not ready to push for liquidation, and now headlines here proposing a new restructuring plan for this month. We'll see if there's any kind of movement in the stock here. Still seeing quite a bit of red, though. This is Bloomberg.